Okay, welcome everyone to week one of the FDIC Money Smart program. This is a class that was designed by the Federal Deposit and Insurance Corporation. It's a government entity that manages banks, and it is for young adults to teach financial principles and basic money management. So this class, for one thing, this is a graded class. So at the end of each lesson, there is going to be a post-test that you will take on your own time in between sessions, and you'll turn it in the following week, and I will grade that, and that will be for a grade. Now, what that means for you, since you're all homeschooled, depends. Ask your parents. But I'm going to be grading it, and I'm going to expect those turned in every week. So also, one thing I did want to say about this class, with all education, there's a range from theoretical stuff that may or may not actually become useful to you in later in life, like calculus, for example. Maybe you're going to use calculus in real life, maybe not. This class is on the end of like driver's ed. You are absolutely going to use this knowledge in real life situations, and if you don't learn it well and make mistakes, the results can be disastrous. Not as disastrous as a car wreck, but you get the idea. All right, so pay attention to this class. Do your best to retain all of this information. This is all practical, real life stuff that you will use in your life, if not now, within the next few years, for sure. All right? So, for starters, everyone should have done the pre-test on pages 6 through 8, and we're gonna go through that now together. This is not a graded assignment. This is just to see where you are before we even start. So for you guys watching at home, if you haven't done the pretest yet, pause this video right now, take the pretest. Some of it you're not going to understand, some of it's going to be completely foreign. That's okay. The whole purpose of this is to show you where your gaps in your knowledge are before we even start. So pause this video right now, take that test, and then come back. All right. We're going to go through this together. So pre-assessment question 1. Which of the following are insured financial institutions? Select all that apply. Who wants to take a crack at that? Anybody know? Come on, awkward silences. Clock's ticking, let's go. Somebody. All right, fine. The answer is B and C. Banks and thrifts and credit unions. Pawn shops are not insured financial institutions. Check cashing services are not insured financial institutions. Number 2, why should you keep your money in a bank? Select all that apply. Anybody? Huh? ABD? Close. Anybody else?
I put all of the above.
All of the above is correct. Good job. Number 3, when you apply to open a new bank account, the bank will first, what's the first thing they're going to do when you open a bank account? If any of you have opened a bank account, you should know this. Ask for identification is correct. You haven't even opened a bank account. Good job. Number 4, which of the following steps will help you from overdrawing your bank account? Yes. Yes. So, a little comment on that. Check registers are kind of a thing of the past. A lot of people don't do this anymore with online banking. However, with you guys being new to banking, when you do open a bank account, I highly recommend doing it for at least the first few months until you get the hang of this. Because as you will see, transactions that go into and out of a bank account, they post at different times. And just looking at your available balance on your little banking app isn't enough. There may be transactions that haven't come through yet. You may have more money than you think you, or you may have less money than you think you do. So it is very important to do that, especially if you're new. Or if you're playing it close to the wire. You know, if you have like $500 in there, it's not as big of a deal. But if you have 20 bucks, make a big difference. All right, number 5. 2 types of deposit accounts are
Checking and savings.
Checking and savings, that is correct. Number 6, which account would you use to pay bills and buy goods?
Checking account.
Checking account, that's right. In which situation below would you need to see the customer service representative at a bank?
I just ask a general question because mortgage loan would be a more serious thing.
Yeah,
Isn't there a specific person for that?
there is, and that's part of the lesson in here, although, so this class, or this material was put together in 2010, which is 12 years ago, and a lot has changed in the banking world in that time, particularly COVID. And a lot more things are done digitally nowadays. So some of this stuff is going to be a little bit antique, I guess. You can nowadays go through your whole life without ever setting foot in an actual bank institution. You can do everything over the phone and digitally. But yes, you would want to speak to a customer service representative. You don't need to see one to cash a check or to apply for a mortgage loan. You can do that online. Number 8. Which of the following are ways to prevent identity theft?
All of the above.
All of the above. Very good. All right, number 9. Debit cards can be what?
D.
Used at many retailers. Yep, this is a tricky one. Because if you confuse it with credit cards, you might think it may be a way to delay having a purchase come out of your account or pay it off over time. That is not true. Number 10, with online banking, you can access your account at any time to do what?
All of the above.
All the above.
All the above. Yeah, online banking is a great thing.
I got 4 and
11, if you want to get a loan at a bank, you would most likely work with the who?
Loan officer.
Loan officer. Yeah, that one's pretty easy, right? Kind of obvious. Number 12, which of the following is like a check? A document used to pay bills or buy goods.
A remittance.
Nope, it's not a remittance.
D.
A money transfer? No. It is a money order. A money order is something you can use if you don't have checks, but something you're buying, they require a check. You can get a money order at most gas stations or check cashing places or banks for that matter. You can get a money order. You can take cash to that institution, give them the cash, they give you a money order for that amount of money. So, 13, where can you find information on how a financial institution handles and shares your personal information?
B.
C, I privacy notice and 2.
That's right, privacy notices. When you become an adult, you're going to get so sick and tired of seeing privacy notices for everything, but they are necessary and they are helpful.
I said wrong. I'm 17.
All right, how'd you guys do?
I got.
I got 6 and a half wrong.
How do you get half of one wrong?
For the all of the above
I got 6
questions.
wrong.
All the above, yeah.
I got 6 wrong.
Okay.
I got 2
Alright.
and 2/3 wrong.
Okay.
2 and 2/3.
All right, well, let's get started on this.
2 and
All right, so for today, today's class is called Bank on It. It's all about banks. The objectives of this class, by the end of this class, you should be able to identify the types of insured financial institutions. You should be able to identify 5 reasons to use a bank versus not using a bank or being unbanked, as they call it. Describe the steps involved in opening and maintaining a bank account. Describe 2 types of deposit accounts. Identify additional bank services that come with them. And describe the main functions of the different professionals: bank customer service representative, tellers, loan officers, branch managers. If we run out of time, we might skip the last one because you can literally do all of that online nowadays. All right. Who here has a bank account already? Raise your hand. 2. All right. That's just a funny little cartoon you can watch. Okay, so what do banks do? Banks are businesses that offer a safe place to keep your money. Why is putting your money in the bank safer than stuffing it under your bed?
Because in a bank, it's not actually sitting there, so it's not really easy to be stolen.
Mm-hmm. Yeah. Yeah.
They
Anywhere.
actually use it
Yeah.
for things, and then when you ask for it, they just make sure they get that money
Yep. Yeah, so why should you keep your money in a bank? Number one, safety. Money in your bank, in a bank, is safe from theft, someone stealing it from you, loss, losing where it is. Real life story. When I was 18 years old and living out on my own for the first time, I would stash $100 bills in random places around my house
So it's like
to hide them.
every once in a while.
Because if I got robbed, I wouldn't want them to find it. And I figure maybe if they even find one, I'm diversifying, right? You know, the Bible says give portions to 7, yes to 8, because you don't know where disaster might lead. I was taking that kind of literally, and I was like, I put some like in the lampshade and some under the bed, and well, I moved, and I couldn't remember where all of them were. So to this day, there might be $100 bills stashed under the carpet or something of this apartment. Anyway, and fire. Your house burns down, all that money's gone. Cash, if it's gone, it's gone. That's it. Second reason, convenience. You can get to your money quickly and easily. It's all digital. You know, we live in a digital world nowadays. You can have a debit card with access to all your money right there, and it's very convenient. Cost. Using a bank is probably cheaper than using other businesses to cash a check or pay bills. This becomes important when you start working a regular job and your employer gives you a paycheck. Nowadays, most employers won't even give you an actual paid check anymore because it costs them too much. They have to print these checks out and all of that. They will require you to either get direct deposit, which is an electronic transfer directly to your bank account. The greatest thing ever, by the way. Like, direct deposit is awesome, let me tell you. And then the second option, if you don't have a bank or you don't want to do direct deposit, they'll make you get a pay card, which is like a debit card, but it's like a stored value card. Think of it like a gift card. They put your paycheck on that card, and then you use that card to buy stuff. It almost acts like a debit card. The problem with those, every pay card I've ever seen has a whole bunch of hidden fees, like a monthly fee, a fee each time you use it, and if you take money out of an ATM, you have to pay ATM fees, like fees. And your paycheck may be $300, but by the time you've done with all the fees, you're only getting like $250 of it. You know, you're already getting robbed by taxes. Why get robbed by fees too? So, anyway, security. The Federal Deposit Insurance Corporation, FDIC, the guys that make this, you know they're going to plug themselves in here. They insure deposit accounts up to the maximum amount allowed by law. So the amount is $250,000, and it's per person. And I'm not going to go into all of this because you guys are young adults. If you have $250,000, this isn't the right class for you. Anyway, basically, your money in the bank is absolutely secure. It can't be lost by theft. It can't be lost, fire. As long as you obey the rules of the account, you won't be feed to death, and you can't lose it. Even if the bank goes out of business, the Federal Deposit Insurance Corporation backs those funds, and you can still get your money, even if the bank closes their doors. Yeah?
There's some online banks as well that partner with more than one bank, and it stacks.
Okay. Interesting. And then lastly, financial future. Building a relationship with a bank establishes a record of paying bills. It can help you save money and is necessary for getting a loan. So if you ever want to get a loan for anything, you're going to want to have a bank account. A lot of like mortgages, for example, one of the required things we ask for is bank statements from your bank account to see how you manage your money. So it is important to do that. All right. Did I miss anything from the first slide? They're also called financial institutions, offer many financial services. There are two different types of financial institutions. There are banks and thrifts. Now this lesson was put together in 2010. I have never heard of a thrift. I've only ever seen them called banks. Thrift is a very old term. They don't really call them that anymore. They're just called banks. So banks and credit unions. The difference between the two is that a bank is a for-profit company that does banking. Credit unions are, quote, not-for-profit organizations that are owned by people that have something in common. That's why it's a credit union. So credit unions often are touted as cheaper, less strict institutions than your regular banks, because banks are just out for the money, right? They are for-profit corporations. They get their money by charging you fees and by taking your money and giving you very little interest in return, and then lending that money out to other people for greater interest. Well, credit unions do the same thing, but they're not for profit, so they don't have to pay as much taxes as the big banks do, and they pass those savings on to their constituents or clients or whatever they want to call it. That isn't always what actually happens. A lot of times if you were to compare offerings from credit unions and banks, you'll find they're very similar. But by and large, there is a bit of a difference between the two. Typically from what I've seen in real life experience, credit unions might give you a slightly better interest rate on your savings or your loans, but their technology is usually behind. Like if you want to have a really nice banking app that works really well and has a lot of helpful features and tools and everything, you want to go to a bank. If you just want to penny pinch every little bit and make sure you get the best bang for your buck, credit unions might be a better deal. So that's just up to you. But the important thing with credit unions is you have to meet their criteria in order to go there. You can't just go to any old credit union and just open an account. You have to meet their criteria. And some of them are really loose, some of them are really strict. Like there's teachers credit unions. You have to be a teacher to have an account at that credit union. If you're not a teacher, you can't get one. Or Navy Federal, you have to be military. If you're not in the military, you can't have it. Or if it's like if your parents are in the military or whatever. So just be aware of that type of thing. The insurance is different on banks versus credit unions. Banks are insured by the FDIC. Credit unions have a different insurance company that basically does the same thing. It's called the National Credit Union Administration, the NCUA. What they do is the same, it's just a different company. So some people will try to say that credit unions are less secure than banks because of that, but they're really not. It's kind of the same thing. So don't be afraid to look at a credit union versus a bank if you prefer. All right, activity number 1. What page is that on? Activity 1, page 10. All right, 2 questions. Stars and Stripes Financial Institution is insured by the FDIC. It must follow federal and state laws. You could get a loan, a credit card, or open a checking or savings account there. Which one is it? Is it a bank or a credit union?
It's a bank.
Correct. That is a bank. It's insured by the FDIC. Only banks are insured by the FDIC. Credit unions are insured by something else. Second one, great financial institution requires account holders to be faculty or staff member or student at Great University. The account holders are also the owners. Which one is it? A bank or a credit union? Yes, that is a credit union. Good job. Okay. This next part in your guide is you'll see this big grid with 3 different bank names on the top and a bunch of questions. This is your big, important homework assignment. This week, you guys need to research, probably from a computer or whatever, look at 3 different banks and or credit unions, look up what their offerings are for different bank accounts. For you, you're gonna wanna look for student accounts or things like that, and compare all the answers. You're gonna have to find the answers to all these questions on their website. All this information will be available if you know how to look for it, and if you don't, figure it out. and compare all these different accounts. This is gonna be your homework for next week. I wanna see that you guys took the effort and did your diligence to find the answers to all these questions on 3 different banks or bank accounts or credit unions, whatever. So this is probably the biggest. You know what? I'll give you 2 weeks to get this done. So not this coming week, but the week after that. Have this completed. And as you do this, like after we're done with this class, you might be thinking about opening a bank account. A lot of banks will allow you to open a bank account as soon as like age 14. You can get a checking account. which we're going to talk about checking and savings here in a minute. So as you're doing this, like really put in some effort to find the answer to these questions and compare them, because you may be choosing where you're going to open your first bank account. All right? All right, next section, opening and maintaining a bank account. So there's 4 things you are going to do when you open a bank account. Number 1, you're going to have to open the account, obviously, getting it started. Then you're going to make deposits and withdrawals. What's a deposit? Anybody know what a deposit is? What's a deposit?
That's putting your money into the bank.
Yeah, putting money into the bank, taking cash, depositing it into your bank account. So what's a withdrawal?
Taking money from your bank account.
Taking money back out, yes. Next, recording interest and fees. Interest is money the bank pays you for holding your money. So it's kind of a cool idea. Like, not only are they holding your money and keeping it safe for you, they're actually paying you to do this. It's pretty awesome. And then vice versa, fees. Fees, banks do charge fees, and that's a big part of your big homework assignment, is researching those fees for different banks, because there are a lot of different fees that you can be charged. And I'll tell you right now, they are way more than you might earn in interest. All right? So pay attention to those fees over and above what interest rate they give you on those bank accounts. Which, by the way, nowadays, interest rates on checking accounts are so low, some of them don't even pay interest at all. And if they do, it's like 0.01%. I think I got 9 cents for all of 2021 from my checking account. Woo! All right, and keep track of your balance. Super important to keep track of your balance. All right, let's go through this. The first thing you do when you go to open a bank account, you can even open bank accounts online nowadays, but I think you will eventually have to do this anyway, even if you open it online. I think they still require you to come into the bank branch at some point, or maybe you can do it, like take a picture of it, upload it to their website or whatever it is, but they're gonna need to verify your identity. And this is a very important thing. All banks and credit unions have to do this. They have to verify that you are who you say you are. It protects you from someone opening a bank account saying they're you when they're not you, and then overdrafting that account on purpose, taking money from the bank, and then the bank goes after you for it. That does happen. And then vice versa, protects them from you being a fraudster. So yeah, we're going to talk a lot about fraud actually later on. But the main purpose of this is to make sure that you are actually who you say you are. So they're going to need your name, your address, your date of birth, your social security number, and they're going to need to see some kind of government issued ID to make sure that you are who you say you are. So very important thing there. Also, how many of you have your social security number memorized? I recommend doing that. It's difficult. It's like 9 digits long, but you're going to use that throughout your entire life for various things. It is a very important number. It's a unique number that the government has assigned to every single person. There may be other Ian Earharts in the world. There may be other Logan Williams in the world. There probably aren't any other Logan Luttges in the world, but there's only one person that has that number, you. So that is a very important number, and anytime you do anything financially related or apply for jobs or anything like that, they're going to need that number. So memorize that number. It's super helpful. All right, any questions about account verification? No? All right. Banking terms. We already talked about deposit, withdraw. Balance is the amount of money you have in your account at any given time. And when you actually look at your bank account, there are a couple different balances that may show up. I should have got a screenshot of this. There's your ledger balance, which is the balance at the end of the last business day, and then there's your available balance. The available balance is the one that's important. Whenever you're looking at your online banking or anything, you look at the available balance on your bank account, because that includes any deposits that have come through or any withdrawals that have been taken out since the end of the last business day. Fees, monies charged by the bank for different services. Overdraft programs. Overdrafting, we haven't really defined that term. Overdrafting is when a transaction, a withdrawal comes out of your account that brings your balance below zero. Negative numbers. Overdrafting is a very, very bad thing in a bank because the biggest fee at a bank is overdraft fees. Overdraft fees are huge. A typical overdraft fee at a bank is like $35 per transaction while you're negative. So here's a real life scenario that does happen. So checks. You guys know what a check is? You know, and we don't really use checks a whole lot anymore, but sometimes we still do. A check, you write out a check to so-and-so paying your water bill or school tuition or whatever it is, and you mail that check out. And then at some later date, they're gonna take that check to their bank and deposit it. And that's when the money comes out of your account. This is where having a ledger is super important because you don't know when that check's gonna be taken out. So let's say somebody writes a check for 50 bucks and they've got 100 bucks in their account, so they're fine. Well, they mail that check off and they forget about it. And then they go around normal week, they buy gas to fill up their car for 30 bucks. They buy dinner for 10 bucks, and then they go and buy a new pair of shoes for 30 bucks. What's their balance? No, because they had 100. They bought gas for 30.
-20, so it'd be like.
It will be, yeah. So the gas was 30, and then 10 for food, and then another 30. So they're at 100 minus, what's that, 70? So they're at 30 bucks, right?
And then $1.50.
Now the check goes through. Check goes through, they forgot about it. They were just paying attention to that available balance every day. The available balance doesn't include checks you've written that haven't been cashed yet. It has no idea that you wrote that check. So now you're negative. That check is gonna charge the overdraft fee, which is gonna put you, instead of negative 20, now you're at negative 55. And then, check this out. One of those transactions that you did earlier this week, it took that institution a couple days for like the processing to go through, and it posts after you're already negative. Now you get another overdraft fee. Even though you weren't negative when you bought it, when it posts, it becomes negative. This is a real life thing. You have a question?
Isn't that why most like checkbooks have the thing where you fill it out?
That's a ledger, yes. Yeah, so ledger is this little booklet that has lines on it where you write down the date of the transaction, what it was, and the amount, and your remaining balance at the end. Yeah, so thank you. I forgot to clarify what that is. Yeah, checkbook ledger is where you write down all that stuff, and I highly recommend using those. Yeah.
I don't know if all banks do this, but ours has, when you look on their website, if you do anything, it'll take it like maybe 5 to 10 minutes for that to show up that there's potential money leaving your account and it's pending, and it'll actually restrict you from using that
Yes.
until it
Yeah.
either is accepted or declined.
Yeah. Yeah. Banks are trying different ways nowadays to try to lessen the impact of overdrafts or try to lessen overdrafts occurring in the first place. So yeah, different banks are going to have different ways to try to avoid that. In fact, we're going to talk about a couple strategies that are pretty widespread here in a little bit. In fact, it might be. No, we just already kind of did this. We're going to skip the activity because we kind of already talked about it. But yeah, we'll talk about different overdraft options here in a little bit. So let's move on to checking accounts. So there's two main kinds of bank accounts. There's checking accounts and savings accounts. A checking account is the main one that we've been kind of talking about. It allows you to pay bills and buy goods using checks or an ATM or debit card. You receive a monthly bank statement and compare the rules. I don't remember this slide. Where is this? Oh, here we go. Yeah, when the main thing that you're going to do with a checking account is you're going to get a debit card. which is basically the way you take money into or out of that account. You know, if you're putting money in the account, you use an ATM, automatic teller machine, and you can use that to deposit money or take money out of your bank account. And then you use your debit card to buy things at the store, and the money comes directly out of your bank account. That is only for checking accounts. Those don't exist for savings accounts. Bank versus check cashing services. So some people decide that banks are evil, they're just trying to feed me to death, and I'm not even gonna do it. I'm not gonna have a bank account. So instead, they use check cashing services. So if your employer pays you a regular check, you can take that check to a check cashing service, and they charge pretty high fees to cash checks, like $5 per check most of the time. So here's the difference. Even if your bank that you're looking at has a monthly maintenance fee, just a fee to have the account at all, it still ends up being cheaper than using check cashing services. As this example shows you, you get paid every week, you cash your check every week, it costs $5, it's charging you $20 a month, which after a whole year is $240 in check cashing fees. So, versus a bank where the monthly fee might be $5 a month for a student account, only cost you $60. I probably wouldn't bother buying checks nowadays. You can get away with most of your life without having to write very many checks. But even if you do, you're still coming out ahead versus a check cashing service. Savings accounts. Savings accounts are a little bit different. They're called savings accounts because the main purpose is for you to save that money, right? And oftentimes, if you have a bank account, they'll usually want you to have both. They'll usually want you to have a checking account and a savings account, which is a great idea to kind of separate your money in your mind, because you want to keep your money safe, right? You don't want to keep any stuffed in the mattress at home. But if you have it in your checking account, you might be tempted to just go spend it all, right? You might just be thinking, hey, my balance is $500. I can buy new shoes. But if you want to set money aside to save for something long term, that's what you want to use your savings account for. So savings accounts generally pay a higher interest rate. You cannot write checks or use debit cards with a savings account. And you can open an account with just a few dollars, or sometimes you need a higher opening deposit for a checking account. Also, an important thing to remember with savings accounts, because they are made for savings, there are some restrictions on how often you can take money out of those accounts. Did you have a question, or were you just raising your hand for fun of it? Okay. The general rule of thumb is 3 times a month that you can take money out of your savings account. Now, what a lot of people don't know, this is a little technicality because I used to be a banker, that only is for electronic withdrawals. So like transferring money from your savings to your checking, they're restricted to 3 times a month. If you actually go to the bank or use an ATM, you can take money out of your savings account as many times as you want. A lot of people don't know that. That is true. So, all right, let's see. Savings accounts, talked about that. Non-deposit accounts. So non-deposit accounts, these are other types of accounts that are not checking accounts and savings accounts. Stocks, bonds, mutual funds. These are not insured by the FDIC. These are more investments. These are things that you would buy with money that you don't plan to use for a very long time, and you want to get more growth, because savings accounts interest rates, as you'll find when you do your research, are not very high. So you're not going to get a whole lot of interest. If you want to get more interest, you can look at some of these. Although a general rule of investing is higher reward, higher risk. If something is giving you a higher expected return, there's more risk of losing that investment. Any stock, bond, or mutual fund that you buy has the potential to lose value, not gain. In fact, in some rare cases, you can lose the entire investment. That is not the case with bank accounts. So they don't pay as much, but they're absolutely secure. You're not going to lose your money. All right? So that's the big difference. There's whole other classes we can teach on investments. That is not the scope of this lesson. ATM and debit cards. So with a savings account, you can have an ATM card, which is a card that is strictly used at ATMs. Versus with a checking account, you can have a debit card, which can be used at everywhere. And then you have stored value cards. So like that pay card that I was telling you about with your employer. Also like gift cards and things like that. So that's just another type of card that you can use. And then additional banking services. So we're going to talk about some of these. Direct deposit, we kind of already talked about that. So that is instead of your employer giving you an actual physical check that you have to take to the bank and deposit it in your account and wait for those funds to become available, because it's not immediate, by the way. If you deposit money in your account, they have this thing called funds availability, which is a time limit that you have to wait before that money becomes available. If someone writes you a check and you take that check to your bank and deposit it, most of the time that money is not able to be spent right then and there. You have to wait a certain number of days before those funds become available. Direct deposit is not that way. Direct deposit, as soon as it's in there, it can be spent. Money orders. Money orders are another form of checks, basically. They're a little less secure than checks in the sense that a money order, once you've bought the money order, so money orders you buy with cash. So say you want to buy, I don't know, a bike. And the guy that's selling you the bike says, hey, you know, I don't really want cash because I don't want to get robbed and lose the cash or whatever. Pay me with a check or a money order. Well, you didn't buy any checks because checks cost money out of your, you know, you saw there's like an $18 charge to buy your book of checks. So instead you buy a money order because you can get a money order for like 50 cents at Quick Trip. So you take your $100 cash, you go to Quick Trip, you buy the money order. This money order is just like cash. It is $100 or whatever amount you bought, and then it is good to whoever's name you write on it. If you lose that money order, it's like losing cash. You can't get it back. So I don't really recommend using money orders a whole lot because there is still some risks associated with those. But that's what a money order is. Telephone and online banking is pretty self-explanatory. You know, you log in on your phone. Usually most banks have an app that you can download and you can check your balance, you can look at your transactions and kind of keep track of things. ATMs, we already talked about. Money transfers. Money transfers are transferring money from one account to another, like from your checking to your savings, for example. There's also another one, and I think it's in here somewhere, wire transfers. A wire transfer is when you are sending money to someone else, typically, sometimes even in other countries. Like wire transfers can be sent to anywhere. They're very secure. And they're a good way to send large amounts of money. Like typically when you go to buy a house, you're going to be paying your down payment via a wire transfer from your bank to the title company. Debit cards, we already talked about. Stored value cards, we talked about those. Loans, you know, I think you guys know what a loan is. It's where you're borrowing money from the bank. And there are many different kinds of loans. We'll get into that later on. Remittances. I can tell you guys right now, I've been in the financial industry for 10 years. I don't know what a remittance is, so we're not going to talk about it. All right, additional banking services. Activity number 3 should be a bunch of questions. Let's see, what page is that? 17?
Yes.
All right, question and answer. Here we go. All right, number 1. A method of electronically transferring money from one bank to another. Who knows what that is? This is all stuff we've talked about.
Money transfer?
Money transfer. That's right. Good job. The answer to number 1 is money transfer. Oh, interesting. Number 2, a specific type of money transfer that goes to a bank or a person in another country. Apparently, that's what a remittance is.
So it's like a wire transfer.
Let's write wire transfer.
Wire transfer.
Like you just talked about that. with
Yeah, I
this.
did. Yeah. So the answer to that one is actually we're going to go with wire transfer. Number 3, a kiosk or terminal where you can deposit, withdraw, or transfer money from one account to another 24 hours a day.
Direct deposit?
No.
It's an
ATM, correct. Automatic teller machine. All right. This one's kind of goofy. You place a call to check your account balance. I'm just going to tell you this because it's kind of silly. The answer is telephone banking. Telephone banking allows you to check your balance, transfer money between accounts, obtain account history, stop payment on a check, and talk about that. Actually, I'm going to talk about that real quick. So, let's say you are buying a bike from a guy on Facebook Marketplace, and he says, "Hey, mail me the check, and then I'll ship you the bike." Number 1, don't ever do that.
He's gonna get the check.
Here's why. He's a fraudster. There is no bike, and you're mailing a check to this guy for nothing. And he's going to cash that check, and he's going to keep your money, and you're not going to get anything for it. And then you're going to try to message him on Facebook, and he's going to block you. If you have fallen for that, and the check is still in the mail, you can contact your bank and do a stop payment on that check, which basically locks down that check to where when he tries to cash it, sorry man, this check's no good.
Will the police catch him for that? Because he's trying to pull money out of your bank account.
Probably not. You can also use telephone banking or online banking for that matter to report a lost, stolen, or damaged card. If you lose your debit card, you can lock down that debit card and cause it to not be able to be used anywhere in case someone stole it, and they can send you a new one. All right, next one. This service allows you to check your balance on the computer. It may also include the ability to pay bills or transfer funds between accounts. It will also do everything that we talked about in telephone banking. What's that? Online banking. The greatest thing since direct deposit. Online banking.
Is that an option?
All right. Number 6. This service is used like a check to pay a bill.
Money order.
Money order is correct. Number 7, one method your employer or a government agency might choose to issue your paycheck or benefits check.
Value card?
Yeah, sort of.
That is one way, that's true, but the answer for this one is direct deposit.
That should be a more clear question.
Yeah, it kind of should, because it could be either one. Number 8, money you borrow from a bank with a written promise to pay it back later.
Loan.
Loan, that's right. Number 9, when you use this card to buy something from a store or another business, the money comes out of your bank account immediately, or close to it.
Debit card.
Debit card is correct. And then number 10, a card onto which you can load money to be used for future purposes.
That's one of those.
Yeah, that is the stored value cards. There's a wide variety of stored valued cards out there, like gift cards, prepaid Visa cards, pay cards for your employer. It's all kinds of different things. Okay, now we're going to talk about privacy. So one way that banks and financial institutions make money off of you depositing your money in their account is they sell your information. Yep, it is true. All the information you give them, not all of it obviously, there are laws that keep them from sharing certain things like your social security number and things like that. But anything they possibly can, they will sell. And they often sell it to advertisers. So once you've opened a bank account with your name and your address and all that stuff, you might start getting things in the mail like credit card offers or loan offers or who knows what else. That is because of the privacy rules. And one way you can stop that is by reviewing the privacy notice when you open your bank account. They will tell you exactly who they're going to share. Well, not exactly. They'll say what information they share, kind of who they share it with, which is usually like categorized, like we only share your information with our own company, or we share it with our company and affiliates with us, or we sell your information to anybody that asks us for it, you know, something like that. And it will also show you the steps to restrict that sharing of information. So if you're super diligent, like the day you open your bank account, read that, follow the steps on there, and you can stop from some of that information
Is there a
sharing.
fee to stop that?
No, there is no fee to stop that.
That was
Nope.
the
The most common thing you'll find with sharing information is credit card offers in the mail. Probably not right away. You guys are pretty young, but as you get into your 20s, you're gonna get credit card offers in the mail all the time. And if you don't want to be bothered with all that stuff, you can go to this website, visit optoutprescreen.com, and put your information in there. It will ask you for private information like your social security number. But if you go to this specific website, it is safe. They don't share your information. The entire purpose of this website is a place where you can opt out of all of that information sharing, at least as far as like credit card pre-screened offers and stuff like that. So this can be super helpful. You might actually share this one with your parents. They might like to know about this. All right. Any questions about privacy policies or privacy notices or anything? Okay. Identity theft. These are the main types of scams involved with bank accounts. There are 3 different types of scams of identity theft. The first one is phishing. Phishing. Phishing is when they send out emails that appear to be from a legitimate source. Your bank, your school, Epic Games. We actually had a real life example of this happen to one of our unnamed children. Had gotten email from Epic Games that said, hey, there's an issue with your Epic Games account. Click this link, log into your Epic Games and fix this issue. He clicked the link in the email, thought he was going to Epic Games. It wasn't Epic Games. It was a fake website that the fraudsters managed that looked like the Epic Games website. Put in his username and his password for Epic Games, and then it just like sent him somewhere else, whatever. They had his login information. They logged into his Epic Games account and they transferred all of the stuff that he had bought, like anything of value they could possibly take, they took out of his Epic Games account. Now that's a small example. Think about if someone did this with your bank account. All your money, gone. This happens. This really does happen in real life. So be very, very careful with emails that try to trick you into giving personal information. Anytime you get an email from anything that says click this link and enter your login information, no matter what it is, don't click the link. Go to that website using your web browser, the actual website, and log in from there and see if there's anything wrong. Don't ever click links in emails unless you know for sure what it is.
Even the links themselves, without even putting anything in, can have embedded spyware or anything else that they can just sit and monitor
Yes.
your computer,
Yeah.
watch you do
Yeah.
literally anything on your
Yeah.
computer.
Yeah, it's kind of crazy how much technology is around finding your information and tracking everything you do on the internet. It's kind of scary. But one good way, a really important, like basic fundamental thing for you to remember is don't click links in emails. Just in general, just don't. Now, there are some cases where like you're trying to create your account and they send you an email confirmation and you have to click the link for that. If you are in the process of doing that and you get that email that you were expecting, you can click that link. Like you kind of have to in some cases. That's fine. But if you get an email that you weren't expecting that says, hey, your bank account is overdrawn, click here to find out what's going on. That's a scam, 9 times out of 10. It is a phishing scam. All right. Farming is similar to email phishing. It's where they try to get your information. Oh, that's actually the exact thing. Okay, so phishing and farming are the same thing. And then skimming. Skimming is when criminals steal your debit card number by using a special device and putting it where you put your card. Most common thing where this happens is at the gas pumps. When you go to get gas and you put your card in the gas pump thing, these guys, skimmers, will put a little device that looks like it's supposed to be there. They put it over where you put the card in, and as you're sliding the card through, it reads the card. And they get your card information. And then they go and use your debit card number to buy stuff from other websites or whatever they can do with it. They steal your debit card information.
That's why there's usually tape all over them. You're supposed to wiggle everything. If
Yes.
At all loose. Just
Yeah.
use a different one.
Yeah, so some things you can do to prevent this from happening to you, from falling victim to this, is know what the gas pump, know what the card readers look like. So if one day you go there and it looks different than it did before, go to a different pump. And maybe tell the people inside that this is going on. I worked at a gas station before, and part of our job was to check the pumps for skimming devices on there. So if you find one, let the people inside know. They need to know about that. So they don't want that to happen because they want people to come to their place and not get their information stolen. Another one is kind of similar to phishing, but just fake websites in general. Another thing that can happen sometimes is they'll get a website that's similar to a website like PayPal.com. There might be a PayPill.com. And for those of you guys who are a little bit dyslexic and like to mistype things sometimes, you might fall victim to something like this, where you go to paypill.com and try to log in, and it's not PayPal. And so an important thing for you to do, let me just show you this real quick. You guys probably know this, but I want to show you this real quick. So if you pull up your web browser, I have no internet in here, so this might not work. But I want to show you guys this is super important.
Is it
The URL, yeah, the HTML, the HTTP, whatever. This bar right here, up on the top of your web browser, this is where you're gonna see the name of the website. So if you go to Facebook, it should look like this, facebook.com. There should not be, the one thing you don't want to see is www.fraud.facebook.com. Whatever is directly before, or whatever is directly after the www dot, that's the important part. If you've got anything other than the website name that you're trying to go to in there, you're in the wrong place. All right? So keep that in mind. All right. Okay, activity number 4. How are we doing on time? Oh, we're almost done. All right, scenarios. Let's let someone else do the talking. Who wants to read number 1 for us? Logan, you volunteered someone.
You answer the phone one evening at home. The voice on the other end is offering a free weekend trip to a ski resort. But to get your coupon, you must give a credit card number. Sounds like a great idea. Do you give the number?
What do you guys think?
No.
No! They could use that number to commit fraud.
You should give them your brother's.
Never give anyone your credit card number, your debit card number, your bank account number, anything. Very good. Number 2, who wants to read that?
I can.
Okay.
You receive an email from someone who says they are in your math class, but you do not know them. They say that they need to get on the school network to check home, but they lost their password. they want to borrow yours, should you give it to them?
What do you guys think?
No.
No! It could be anybody trying to damage your login account. All right. Number 3. Who wants to read that one? Come on. There are 5 of these, so there are 3 more people. Either raise your hand or I'll call on you. Roger! Number 3.
You call your bank to find out if a deposit was posted to your account. They ask for your SSN to verify your identity. Do you give it to them or hang up?
Yep. So first off, real quick, SSN is short for Social Security Number. That's that all-important 9-digit number that is yours and no one else's. Do you give it to them? What do you guys think? Nope. Definitely not. So here's an important thing, and I didn't talk about this before, but there are telephone fraudsters are even more prevalent than email fraudsters. They particularly prey on older people, actually. And the basic rule that will help you avoid a lot of that is no company will ever call you and then ask you for your information. They already have your information if they are your bank. They shouldn't need to ask you for it. And if they called you at the phone number they have in file for you, they're not going to ask you anything else to verify your identity. They already have all that. In fact, you need to be asking them questions to verify that they're actually your bank. Say, if you're my bank, what's my balance right now?
Oh, same thing with your computer. Ask them your IP.
Yeah,
And if they can't tell you, they don't actually know your computer.
right.
Mhm.
All right, number 4. Who wants to read that one? Good, I was going to call on you anyway.
Your dad just paid all family bills for the month. He hands you a stack of those stubs and asks you to throw them away. Should you?
No.
No, to cut them up.
Cut them up. Yeah, we didn't talk about this, but bank statements, check stubs, anything with personal information on them needs to be shredded and disposed of in a way that the fraudsters can't get to it. Like old debit cards, one trick that I've learned is with debit cards and things like that, cut it up and then throw it away in different trash cans. Because
They'll go out different times.
yeah, it'll go out at different times. If the bad guys are rummaging through your trash, they find one piece of a debit card, they're gonna keep searching until they find the other piece. But if it's not in there, they're not gonna find it. So, or you can burn it. Burning it works well too. Yeah, burning works great.
Not good for your lungs though.
Yeah, well, I mean, it's paper, you know? You could cook a hot dog over that. Who cares?
Oh, I thought you meant like credit cards.
Oh yeah, no, yeah, like banks, like bank statements, things like that. Yeah, you can totally burn those. All right, last one. Who wants to read it? Go for it.
You receive a letter in the mail from a well-known credit card company. It says they are concerned about a recent activity in your account. They want to protect their customers, but you have never had a credit card with that particular company. There is a 1-800 number to call to speak with fraud service representative should you call it.
No.
I mean, you're not at risk for calling.
Yeah, so this one, the answer is yes. You should make sure the number you instructed to call is really that credit card company's phone number. How do you find that out, by the way?
Go to their website.
Google. Google. Anytime you want to find something out about a company, Google it. You'll find it. Yep. Go to their website and see if that's actually their phone number and find out if it's true or not. So this is another type of scam that is pretty prevalent out there. Although, okay, so to be fair, this isn't a scam. It's a sales trick. A sales trick where companies try to scare you into contacting them so they can sell you something. Insurance companies are notorious for this kind of thing. So I'm a mortgage loan officer. I deal with a lot of people that buy houses. Every single person that buys a house with a mortgage gets a letter in the mail from some company that says Fairway on the top of the letter. That's my company's name, Fairway. And it says you need to contact us to get your mortgage life insurance plan set up. We don't offer mortgage life insurance. So mortgage life insurance, by the way, is a real thing. It is a life insurance policy where if you die, the insurance policy pays off your mortgage. So your wife or your kids, whoever gets a house without a mortgage on it. It's not a bad thing, right? Not a bad idea. But these companies are posing as us in order to scare you into buying it from them, thinking you're buying it directly from us.
And
We have nothing to do with this
you
company.
should call your mortgage loan officer.
And they do it to every single person. In fact, when I was doing loans for PNC Bank, they did the same thing, posing as PNC Bank. They just get the records, public information of every single person that buys a house, and they send it to them, posing as whatever mortgage company.
Is that not illegal?
Yeah.
No.
How did they get the information from the bank in the first place?
Well, that's
Public information. You can go to the Recorder of Deeds office in any county in the United States, and you can get copies of every single person that's bought or sold a home, and you can even look at the mortgage note and get the name of the company that they got it from. It's public information.
Are you able to tell them, like, hey, you might get a letter from this person?
I do. Yeah, I have a 4-paragraph email that I send to every single person after we close on the purchase of their house. Watch out for this scam, watch out for this scam, watch out for this scam, watch out for this scam.
Does
Yeah.
everyone do that?
No, it's just something I do because I care about my people.
But then that in itself could almost be a scammer warning you about potential scammers and getting you to trust
Right,
them.
yeah, yeah.
We want to get into
Buy
that.
our anti-scam insurance. Yep. All right. We're almost done. And we're already over an hour. So we gotta get this done quick. So last thing we're gonna talk about. What do you do if you are scammed? If you fall for a scam? First thing you do is file a police report as soon as possible. Save everything. Documentation is key. If you actually want to catch the bad guys, the only thing that catches bad guys is documentation. Save everything and give it to the police. Secondly, and this is just a sad reality, I hate to be the one to break it to you guys, but the cops can't do a whole lot about it. They really can't. You know, you watch movies of like Catch Me If You Can is an awesome movie about this guy who is a fraudster. Yeah. Probably not appropriate for anyone in this room. Good point. But there are movies out there of like these fraudsters and the cops who go to great lengths. And I don't know if any of you guys watch like what's those like Law and Order shows and stuff. I don't watch any TV, but I know they're really popular.
Catch Me If You Can is a true story.
It was. That's true. But
A lot of 3-letter groups were trying to catch him for that.
yes. So, but in reality, the cops, it's really hard for them to prove that these criminals are doing this stuff, and it's even harder to find them, especially like online phishing scams and stuff like that. So, yes, file a police report, but you're basically on your own. So you need to be extra careful to make sure that you don't fall for any of these scams in the first place. Because if you do, you're not getting your money back. You're just not. So, and the bank's insurance doesn't cover you doing something stupid and giving someone your information. All right, so this is truth. All right, another thing you can do, credit scams are pretty common, identity theft. One thing you can do, and this will kind of be something that you'll do later on in life, you can place a fraud alert on your credit report, and checking your credit report on a regular basis is a good idea. Yep. So that is pretty much it. Anyone have any questions about anything? Okay, homework. First, you have that 2-page grid of all the things that you need to look at different bank accounts. Secondly, I'm going to be emailing you guys or your parents or whatever a link to download a digital module for this. It's like a little 15-minute lesson that kind of goes over a lot of the stuff again. And it's pretty helpful. I recommend you go through that. You're not graded on that. It's just kind of an extra thing you can do. But it just reinforces a lot of the things we talked about. And then lastly, the knowledge check that starts on page 27 through page 29. It's 13 questions. This is your test. So this needs to be completed and turned in next week when we come back, and I will grade this. And this will be your grade. And there will be one of these at the end of every lesson. And that's how you're going to get your grade for this class. So pay attention to those.
Can we do it right now?
Yeah, you can absolutely do it right now. All the answers should be in your book. And that is pretty much it. Thanks for your attention, and we'll see you next time.